Hello, good morning, everybody. Welcome to SustainableFinance.Live with Finextra and Responsible Risk. Looking forward to working with you today in this workshop. We'll just let a few more people join us and then we'll get started. Very good, looks like a few people coming in. So just because we've got a lot to do and there'll probably be a lot of people entering as we start, I'll get the process rolling. So I hope some of you managed to join us yesterday where we had a couple of sessions, but I'll give you a little recap if you missed yesterday. So bear with me if you've heard it before, and if you haven't, hopefully it'll give you a chance to keep up to speed with where the rest of us have got up to so far. Our great set of subject matter experts are with us today, and I'll try and hopefully you've seen it all on the website, but Sadia is going to take over from me. She'll be leading us through the workshop session, and she's ably joined by Matt Smith. Matt is going to be working on the whiteboard, capturing the inputs from the session that he'll be sharing with you, both ex-Microsoft colleagues and innovation strategy leads, chief product officer, as you see on the title. Paul Jepson will be picking up the reins. He's nature recovery lead at EcoSolis. So for those of you yesterday that came into the investor session, this session I think will suit you if you've got that sort of on the ground conservation mindset that you're interested in. Tony as well, he's going to join us, CTO Perini Foundation. He's going to bring us that blockchain expertise, the tokenization expertise that we're going to need for this session to work. And then Justin comes as an independent financial advisor, and he's going to help us with the financial expertise. Julia, CEO Earth Knowledge, with the Earth Systems data information. We heard from Frank from Earth Knowledge yesterday. Anna Pobritsa, she's a long-term partner with us on SustainableFinance.Live. She has a lot of experience in water conservation, DLT, blockchain, and so forth. Adrian, founder and CEO ESG Treasury, joins us again, and he was lead in one of our previous sessions, obviously brings again that banking financial experience. Suzanne, who you may have heard yesterday, from Nature and Spatial Finance lead at WWF. Anne-Marie Slot, again, was involved in the investor session yesterday, brings the legal expertise as Global Sustainability Partner at Ashurst, and David Cox, Strategy and Sustainability lead in Microsoft. So a great team of people. Let's tell you how it's all going to work. But first of all, a quick reminder of how the day went yesterday. The way we do this, lean back, lean in, learn by doing. The lean back was just to sort of give some baselining information to everybody so that we know the problem that we're dealing with, as well as discuss some of the challenges and determine the scope of the session. So Suzanne gave us the background, obviously, on why nature matters, but what the issues are, but also really why financial services industry should be thinking about it. Frank got into the detail of how actually there is data available, even though many say there isn't good granular data available on nature. In a way that's decision ready, as he spoke about a case study with PG&E and how if they'd had some of the information that's available, they might have been able to avoid what is a relatively well-known story of natural capital being impacted and therefore affecting their share price. And then we heard from Philip Zauti, who's pioneer of Morova Asset Management, one of the leading asset managers contributing significant funds into ocean, forestry, and wildlife funds. He spoke about the challenges they've had in finding projects that they can actually invest in. Dan Hurd from Triodos backed that up, talking about the projects that they work on and the companies that they invest in. And again, he also spoke about the challenges of supplying good bankable projects which banks can invest in. And then the workshop after that really tried to drill in from an investor perspective, from the lens of the investor, not the lens of the investee, not the lens of the data company, but really trying to explain the challenges they have in building these bankable projects, which obviously respond to the needs of their shareholders and investors, but obviously also deliver to the needs of society and to conservation. And that was quite an active session, and we hope we'll have the same again today. Excuse me. So this session, you've got a blank slide in front of you for the moment, is going to be on the investee side of things. And let me just do what we've done in all our previous sessions, which is lay out the sort of complex landscape that we're engaging with. And the reason that this session is so exciting is I think in a way it might blow sort of, the cart and horses through some of this complex structure, which is really the basis of yesterday's discussion. But let me start. So for some people, they wanted to get a basic understanding of what is natural capital. And, at the beginning, I wasn't sure the difference between biodiversity, ecosystem services and natural capital. And this diagram explains to us quite simply how we look at all of the biodiversity, which is all the living things, essentially, if you will, represented here as woodland in this example, left to right, captured through trees. And then as we move into ecosystem services, what does it do for sort of mankind, if you will, in terms of water storage and flow irrigation? And then how does that start to impact on the financial services industry and society? Well, it starts to lower flood risk, which obviously could benefit the insurer if you move to the banking side of the equation, and reduce damage, which would benefit the asset owner, which might be on the banking side of the equation. So we know that all of us, civil society, stakeholders, governments, and many others are demanding that we take action on the biodiversity and nature loss. But what's the role of the financial services industry? A simple construct is what we look at here, where at the bottom, where it says asset owners, we think of those people that hold our money, the pensions, the insurers, the sovereign wealth on behalf of governments. These people with a long-term patient view are the ones we turn to say, well, you should be investing in our future. Of course, they turn then to intermediaries, and we heard from asset managers on the left side of this picture, like Morova yesterday, who deploy different asset classes, equity and debt. They work in the public and the private markets. Historically, they've just focused on financials, but more so now with ESG, focusing on natural capital and social impact. And the banks themselves focusing on that sort of debt loan market. All of these have to have what they call bankable assets. And those bankable assets have got to have a business case. And that business case is based on all the things I'm afraid we've all dealt with probably in our lives, net present value, ROI, and so forth. So they turn then to deliver the understanding of the business case back to the investee. The investee has to say, well, this project or this company or this portfolio is going to be low carbon, low biodiversity impact, and you've all been given the blizzard of corporate disclosures if you've been in this space. The investor takes this information and obviously then justifies its investment, and that's what is creating a lot of the supply and demand side problem that we've been hearing about. But does it matter? Well, yes, it does. We heard yesterday that something like 50% of GDP is aligned to nature. And so we do have to get this right. And where it's been ignored to date, we're going to have to improve on that. So people are piling in. There's more policy, there's more data providers, there's more legal information. The primary and the secondary markets, those that invest and then those that securitize and sell on, they're all working in this area. But still, we have quite a lot of problems. The problems largely come down to the detail of where is the impact of this activity and this investment in the supply chain. Where is the asset? Where is it actually located? What impact is it having on nature? And that information we spoke about a lot in our last workshop, that we can move from self-reporting, and we can start to bring in the technology lens of satellites, sensors, Earth systems data, which are information ready and presented to financial advisors, as well as computer science data, moving it into the sort of risk equation, if you will. At the end of the day, the risk systems are what drive the money out into the market. So our team here is going to pick off, or our 3 workshops, I should say, at the bottom, we scoped down to pick off 3 areas. How do you build a portfolio, an institutional portfolio? Secondly, this workshop, how do you actually bust some of that apart? And how do you think about how tokenization could connect nature projects more immediately with citizen investors, as well as give the potential to roll that up to institutional investors? And that's what we're going to explore today. And then also, we're going to look at the role of this data to help with education and scenario planning, which will be this afternoon. And our team, as you see spread across there, we represent everything from data, legal, conservation, tokenization, you name it. There's a fantastic team of people here that are going to discuss this, but you too, hopefully, are going to pile in, and I'll show you how we're going to do that in a moment. All of this gets captured in different forms of whiteboarding, as you will see, and then we capture it, clean it up, and make it available as a visual record. So hopefully you'll have a takeaway from this brainstorm as well. The whiteboard tool, I'll save that for a moment, but we'll be having a look at that and we'll tell you how that will work. And then I'm sure you're used to Teams now, but how are we going to use it today? We'll keep you on mute, or keep yourself on mute if you can. But then if you want to get involved, you can put your hand up. You'll probably have seen that. We will try and manage, with the number we've got, as many of you into the conversation as possible. We'll also maybe even open the mic if it's going to be more useful for some. Now, the side chat, feel free to use that as we go. Take that as you've gone to the side of the room and you're having a cup of coffee with someone because you've got a bit of a brainstorm that you want to sort of riff with somebody. So feel free to natter away on the side chat. We'll try to bring you into that as well. So let's give ourselves some parameters. We've worked to try and scope this down. And the problem statement that we wanted to address is this one of the finance world being quite keen to invest in projects that restore ecosystems and sequester carbon. But this need for verified units of change that we can produce, traded, performance tracked, accounted for is all part of that business case I spoke about. Equally, owners of land assets, their tenants need to generate sustained revenue from the land, and growing numbers recognize the need to recover the natural fertility, vitality, and the value of their land assets, along with the rural economy and lifestyle. So we've got 2 sides of the supply and demand equation, but this problem is how to scale this via, particularly in emerging markets and using different types of credits. We'll hear more about this from Paul as we go through. How do we create business models? That's the other area that we need to sort of solve, and how can we use these new rewilding models for natural carbon credits? The scope of this workshop, therefore, and think about this scope, because I know lots of people will want to take us left and right field, but we're going to try and focus in here on this. How do we assess bottom-up generation of an NFT, non-fungible token investment model? And could such an approach be developed to meet the needs of that financial world that we spoke about before? Will it help with this supply challenge that I've referred to? So that's what we're going to focus in on. And with that, I'm going to hand over to Paul. And while the slides are being switched, they will switch out from the ones that I'm using here. We will also be doing a few polls, and those polls are important for us to check the temperature with you and understand a few questions. So I think what we'll probably do with that is hand over to Sadia. And Sadia, the microphone is yours, and I think Paul will probably start, just to give the rest of the reins over to you.
Hi, thank you, Richard. Hi, everybody. It's lovely to be here this morning. As Richard quite rightly said, we're going to have lots of whiteboarding. We really want to hear from all of you in the audience. There are never any silly questions, and all thoughts and opinions are welcome, and we'd love to hear it. Are Paul's slides ready to go? Yep, in which case I will hand over to Paul, who's going to take us through a case study on rewilding nature. Paul, over to you.
Thank you, Sadia, and yeah, good morning, everybody. Lovely to be with you online, and I'm really grateful for this opportunity from Sustainable Finance Live to present a concept for a token for rewilding nature. I mean, Richard's just given a fantastic preamble, so my preamble, I'll try and keep it short so we can get into the sort of meat of the concept, which we'd really like feedback on and comment on. So if we could just go to the next slide, please. I think we're all aware that markets or market demand, perhaps put it that way, for natural capital credits is growing. And also, I think this is very much the case in the conservation or the rewilding world. It's recognising that the climate and nature emergency are linked. That actually ecosystem restoration is what will help. Well, ecosystem restoration not only delivers a whole set of bundled benefits, ecosystem services, which Richard just referred to, but one of those ecosystem services is also carbon, reducing atmospheric carbon. So this idea that it's really coming to the fore, I think, that these two issues are linked. If we can restore ecosystems, we'll get a whole set of benefits for humanity, but that also links into the global carbon cycle and the climate issue. Go to the next slide, please. However, and again, we've talked about this, the supply side, that supply of bankable projects is really limited at the moment. If we are going to restore ecosystems, we need two things, in my view. It just boils down to two things. We need the supply of land, but by the supply of land, we need the willing landowners or the willing tenants who are willing to start changing their practices to, if you like, produce nature recovery, carbon drawdown, avoided carbon emissions, or whatever. But crucially, we need something. All land is an asset. It needs to generate value. It needs to produce something in terms of that is valuable. We need some form of unit of ecosystem change. With carbon, it's a unit of carbon, carbon stored, a ton of carbon. But we need that unit of broader ecosystem change. So the supply of land at the moment is in short supply, particularly in Western countries such as the UK, where there's a demand. And the second bit, these sort of indicators of ecosystem change, these units of ecosystem change, that is still under development. So what I'm going to present to you now is just a sort of a concept for a business model, if you like, which might address those two problems. So if we could move to the next slide, which is the first element of it. And this is the idea of how do we overcome the supply of land side of it. And it's suggesting that we could perhaps do that by buying leases or buying the rights to rewild. So most land economies, as we know, they're structured. Someone owns land, be this a private individual, the state, public utility, or whatever. But often the rights to do things on that land, be they to crop that land, to graze on it, to hunt on it, are split. So the idea here is that actually we could also add another right to that, introduce a right into the marketplace, renting the right to restore ecosystems. And it seems to me that and this is something I quite like the input from our financial colleagues on this, would a portfolio of 30-year leases to rewild, would that in itself be a bankable asset? Is that something which could be invested in? So that's one side of the idea, that generally people are more willing to lease land than to sell it. Also, leases have that flexibility to deal with all of the complexities of land ownership and land tenure and so forth, and the contractual opportunities of who generates the value from the next part of the equation, which I'm going to present, which is the revenue generating aspect of it, which is this concept for a nature recovery or a rewilding NFT. So if you could go to the next slide, and I'll just talk you through this. I'll go a little bit slow on this, just so you can understand this this diagram. But I think this is the core of what we want to, or what we'd like to workshop this morning. So let's start in the bottom left-hand corner, and you'll see this idea that some form of special purpose vehicle has been set up and it has acquired the rights, leases, to rewild a portfolio of different areas of land. The next part of it is that we then assess the ecological integrity of that land and baseline it, basically. And this is done by, this is a technology we're developing, EcoSulis is developing with other partners called Credit Nature. I won't go into that at the moment, it's a whole other story, but you need this technology in place, and that links, I think, to some discussions you had yesterday of different data streams coming in together into a data integration engine. The radar graph in the middle there is if you like, our framework for assessing and changes in ecosystem integrity. So once we have that ability to, if you like, convert land into a state of ecological integrity and then measure the improvements on that on a scale, so moving up a scale, we then have the opportunity to convert those units into a token. The idea here then is that rather than just creating one token of rewilding, so going from, just for instance, scale level 2 on a hypervolume scale to level 4 or something like that, we can actually split this token into different categories of token. So buyers can have buy a different thing, if you like, or a different stake in that recovery project, that rewilding project. So on the bottom level, we have what's called passive rewilding, which is basically you're just buying a stake in that lease, and nothing can be done with the land. The next level up of token, or different token, you might wish to buy this, is active rewilding, where you're actually buying a token and the investment is going in to enable the ecosystems to recover. For instance, taking out fencing or taking out drainage and so forth. And then the third level is the more sort of exciting part of rewilding, is restoring the guilds of herbivores, which used to really drive accelerated ecosystem recovery. Now, the idea of the NFT tokens, so these will be tokens which are located on a blockchain, so they're verified, and they're unique, and they're permanent on that blockchain. And the idea is that token would take the form of a nice piece of digital art, but a piece of digital art with a whole set of data embedded in it. And that data would be the location, the evidence of the state of the ecosystem, and then over time, the ecosystem change on it. It might also include smart contracts that enable the holder of it, gives the holder of that token certain perks and usage rights. This might be an opportunity to visit the rewilding area, or it might be more detailed storified data and evidence on the rewilding area. And it gives the owner the right to resell that token. And then there'll be part of it in where if there'll be a percentage of that resale value which goes back to the project. Now, the core idea here is that sort of token, that sort of digital token in it, which is basically creating a value from this rewilding asset, this land asset, that will have different forms of value to different types of buyers. So somebody like me might just say, yeah, I'll buy one of those tokens just because I want to invest in the social ideal of restoring ecosystems. I mean, we did this in our local area. We bought a share in our mini hydro. We didn't really want any return on it. I mean, we might get a return on it. We just wanted to be investing in our community, if you see. So there's going to be those sort of people, the people who want to support rewilding value thing. There might be other people who like that they just want to, it's just cool to have these tokens, like that piece of art. Wow, yeah, I invested in that rewilding project, which everybody is talking about. Some of you may have heard about the NEP rewilding project in the UK. I mean, how cool would it have been if they had launched a token 8 years ago? Everybody wants a stake in that project because everybody is talking about this rewilding project in it. It might be that other buyers, like maybe a public utility company, the water company, actually wants to buy these or invest in these tokens because they realise that they get a whole set of bundled ecosystem service benefits out of it. You know, it might be in a position in a watershed where it helps them with their natural flood management. Corporates might want to buy these, or I think they would want to buy them because they enable ESG accounting on it. You know, that nature positive piece of like, let's achieve climate neutrality plus become nature positive. But also these tokens, because they're contextualized whatever carbon you're buying, but they're telling a story of hope and recovery. And that has huge brand and marketing and strategic HR value. And then maybe for the impact investment world, you may want to invest in this model, but you may also want to buy tokens to demonstrate the output of it. So you can see there that this idea of this token, which is converting ecosystem change recovery into units of value, could potentially appeal to a whole set of different buyers. And this is actually broadening out that market for natural capital credits. At the moment, we're thinking of markets for carbon credits or natural capital credits very much in that corporate world. But it's saying, well, actually, with this sort of NFT token, we could go to impact philanthropies. We could create a new field of citizen impact giving on there. You know, you're not just giving to an NGO, no disrespect to the NGOs and hoping they do good work. Here you're actually investing in something and you can see the returns on it. So for me, this is an opportunity of the tokens. Tony's going to talk into a bit more about what the bits going onto the blockchain means. But what I would just like to finish off this little bit by saying is going back to the left-hand side of the schematic and those units of ecosystem recovery. And a thing we've been struggling with in our networks who talk about this is that carbon sequestration or ecosystem recovery, it needs to work on the timescales of 20 to 30 years. It also, ecosystem recovery, there is a need for transition finance for the landowners because they've got to move out of an agricultural infrastructure investment in kit into a more, you know, nature-based thing. So the idea is, how do you spread that income over a 20 or 30-year period? And this goes back to the credit nature bit and this technique for enabling to measure ecosystem recovery conceptually on a 10-point scale. And the idea is that when you go and notch up the scale, or 2 notches on the scale, that hasn't quite been decided yet, whatever it might be, then you can sell another edition of the credit. So then you have this idea that, you know, you might have been the first investors and you actually invested in a first edition of the credit. You took that ecosystem recovery from 2 on a scale to 4 on a scale. Then you have an opportunity to buy the next credit to go from 2 to 4. So in this way, we can structure revenues and generate continuous value through NFTs over the lifespan of a project or a 20, 30-year lease. And also, you know, obviously we're using sort of concepts from the art and collectible world, that first editions of these tokens may start selling for a higher price than second editions, or you get this idea that wouldn't it be great to have a full set of the tokens. So I hope that's broadly outlined the concept. And just to conclude on the last slide, which I think was some prompts from my side, so we could just go to the last slide, please. You know, you can sit in rooms, you can work with your mates and friends and come up with these concepts. And we have for ages, for years, how can we solve this supply side challenge? How can we how can we generate revenues for landowners of land assets from nature recovery? So, you know, the model I've just shown you, okay, we need development. Is there merit in it? Is it something which we could develop into a bankable investment project? If not, you know, what would we need to make it so? What are the issues in tokenization? I think when you hear from Tony in a moment, we'll get warmed up on that side. You know, our model, the business model assumes that the credits have a sort of permanence, that any projects last 30 years. By then, you probably have full ecosystem recovery if you're lucky. Would this lack of permanence be an issue on it? And one of the interesting things we've looked at is this this is a bit slightly separate, but if we're measuring units of ecosystem recovery, the quality of the measurement will affect the actual quality of the prediction of the ecosystem recovery. Is that a good thing, that you could actually start risk rating these tokens from a financial point of view, risk rating in terms of their likelihood of generating the improvement in ecosystem recovery expected, and in generating that improvement over a predicted timescale? So thanks very much. I hope that's interesting, and I hope it will prompt a good discussion.
Thank you, Paul. That was definitely interesting, and I think it's framed the problem statement really well. While we're getting Tony's slides set up, are there any major questions or outstanding things from the audience that anybody really would like clarified, or from anybody else in the panel?
I mean, I think it's Adrian here. So one question comes to mind for myself that maybe some of the attendees, I think, as well. When we talk about a 30-year lease, the question then comes to mind: what happens at the end of that 30 years? Does that rewilding revert back? So that's something perhaps just to consider, maybe a challenge from the audience.
Absolutely, and I think that's something that we're probably going to get into quite heavily when we get into the discussion, but we'll definitely go into that, unless, Paul, you've got a quick answer.
So the answer to that is that the land asset value will have a different value in 30 years, because all of the fertility will be recovered. And then it really goes back to the lease owner to decide what they want to do with that land asset. And it might be that they decide to return it to agriculture or whatever, or it might be to, that they want to stick with it or whatever. But that is a key concept. It's almost like you're actually creating these rolling dynamic landscapes where you might have restored an ecosystem there, 30% may continue like that, another 30% may revert back to agriculture or whatever, but you're rolling it up, and you've got another set of leases coming up. So we're getting these dynamic landscapes turning over from a rewilding point of view. The carbon side of it is slightly different, as you know.
Yes, and I think I can also attest to carbon being slightly different, as it's something that we at BX look at. I'll take one more from the audience, John Finstore, and then we'll move on to Tony's presentation.
Yes, can you hear me?
Yes, just about.
Yes, I hope this is better. Thanks for the presentation. Just had a quick question. I'm John Finextra from Sustainable Flows in Australia, and curious to get a better sense, just quickly, Paul, about the rationale for your focus on ecosystem integrity and not also including the direct measure of the ecosystem service values.
Yeah. So this is very much within rewilding science. So when we talk about ecosystem service values, one of the limitations of the natural capital framework is it talks about natural capital assets, but it doesn't talk about the mechanism with which those ecosystem service flows can be produced. So we understand any sort of, be it bioabundance, be it natural flood management, as an emergent property of interactions between components of ecosystems. And this is the current thinking that any output of an ecosystem doesn't lie within any one thing. It's in the interactions. Those are what, the ecological processes. So the ecological integrity index is a set of indicators which indicate, based on sort of current science, indicate the ability of an ecosystem to recover and the ecosystem services to recover, which then lead to the ecosystem services. In that sort of graphite radar graph, which you probably couldn't see, the yellow is actually the output measures of ecosystem service and species diversity and so forth, and the blue is actually the ecosystem integrity indicators.
Lovely. Thank you very much, Paul. We'll take some more questions in a little while. Let's hand over to Tony, who's going to explain tokenization from a technical standpoint. Tony?
Thank you so much, and hello from Switzerland. Still a bit snow on the mountains. Can I have the next slide, please? So I think it is important to understand why should we use a token? And I think it's the context of digitalization. So if I have music on digitized an MP3 file, I copy paste it, and I have 2 of these, and I give one to my neighbor. If I have a Bitcoin, I cannot copy paste this Bitcoin and give one to my neighbor. So tokenization is to be seen as we get control back over data, something that we lost with digitization. This has a big impact on the intermediary roles of banks, for example, and I think it is absolutely important that we see there is a disruption, slow but happening in this intermediary space. And when we think of tokenizing something, whatever it is, when I speak of it's something where I can invest in and get return on investment, whether it's a token or a piece of paper, it's a regulated thing. It's a financial market tool, and it's regulated. And if we use a digitized aspect, then it has to be bankable. So it has to be compliant with the regulatory aspects. So this is absolutely important. Let me just also make a quick analogy to another industry. So if I have, Paul said, we'll use a blockchain and a token. So then the question is, well, yeah, but what kind of blockchain? And same as I buy a car and I drive around with the car, you know, what kind of car? It can be petrol, it can be diesel, it can be electrical power. That's one dimension. Another dimension is have a truck or a mini. Well, that's a second dimension. A third dimension could be, well, what brand do I use? So a similar analogy you would have in the blockchain technology. You can look at energy consumption aspects, at reputational risks, at compliance risk, and at governance aspects. So these are all criteria on how do I map that thing that I want to map on what kind of blockchain. So this is a question, but it's also a massive opportunity. I'm not going to answer all of these questions mentioned here. I'm happy to answer them, you know, on a one-to-one session or separately. But I think with the next 2 slides, I can show you also this opportunity that the technology offers when we map something, when we digitize something and we create a token, like Paul said. And the most important and the key point is when we do that, when we do a token, how can we make it bankable? That's absolutely key. How can we solve the AML, anti-money laundering issues, the PEP, the know your customer issues? So I want to make this bankable. And can I have the next slide, please? How do I do it? And what are the opportunities? So if we look at the lowest level, the blockchain, this is an infrastructure question. You could use Ethereum, but why not use another blockchain where you say, okay, all the revenues that are generated by using this blockchain will go back to some cause, SDG 17 or 12 or nature conservation or whatever. So you use the lowest level of the blockchain. You say, okay, I use a blockchain, that's the infrastructure level, and the token that lives there is a so-called utility token. And that can create additional revenue. Then on the level above, you can have marketplaces that can be centralized or decentralized exchanges where these products or tokens live and are exchanged. That are also that also can create revenue, and there is also functions of these tokens living in these marketplaces that can be currency tokens or can be liquidity tokens. The reason why Facebook came to Switzerland with its Libra project that is called Diem now is that there is massive opportunity when you look at currency aspects of tokens. So from a regulatory perspective. So this is an additional opportunity that can be completely compliant with the banking space and the financial market regulator. And what Paul was talking about, you have products, you have something that you map on this blockchain, a token that can be an NFT or another token. And I think it's important to understand the difference between the arts market and the financial product market. So the arts market is very weakly regulated. And when we speak of something that creates interest, then we have to make sure it's compliant. We have to make sure it's all according to the rules. So this is the product, and that's usually where people start to think. But I think to see the opportunity that you can be compliant, and there's so many other levels that you can use, that's important. And then on top of it, the top level is you can create services around the product, the marketplace, or the infrastructure. You can create access or wallets, or an application on the phone where you actually can show, oh, look, that's the token I have. That's my collection of tokens. And again, it's important to understand that if we put water on the mill of such a new technology, we have to be aware that we should do it in a way that it doesn't, create more destruction or create secondary effects that we don't want, but on the opposite, create additional revenue for the goal that we want to achieve. And when you map a token, so you map something on a blockchain, you can always decide what you map. Is it a right? Is it an access? Is it a proof of impact? So you decide what you want to do, and you start with the process first, and then you program it on the blockchain. So I always say humans decide what machines have to do. So you start with what you want to do, then you program it. And when you say smart contract, that's just a fancy name for a program. Smart contract is nothing else than a program, and the computer is not a computer, but a software that is called blockchain. So you start with what you want to do, and you have to make sure it's bankable. The utility has to be bankable. It has to be sure that you don't use an infrastructure that has a reputational risk involved. So what I'm saying is there's a massive opportunity in the decision when you decide where do I want to map this token. And then you can say, okay, what do we want to digitize as the right? And maybe you want to see the results. So that's the oracle. An oracle is the interface to the real world. So basically a token represents something of value, and then you have the data from the real world. And this interface is called the oracle, where you say, okay, some data we use it on the blockchain, other data we have it separately. Can I have the next slide, please? And so when you see these 4 levels opportunities that are in the top right now, you can benefit even further where you create another SPV, like Paul said, where you have an SPV, and this SPV issues a security. It can be a share, and that's fully compliant with the financial market. And this security lives on a blockchain that, again, itself is compliant with the financial market goals. And then you can create derivatives. And I've done that in Europe in 14 countries. It's not something you do over the weekend. It takes time, but it's feasible. And then when you have this security, and that can be a token on a blockchain, then it can be mapped on traditional financial markets. But because it is a token that lives on a blockchain, it's hybrid. It can go to other marketplaces, and the laws are being adapted that this is possible. And when it goes to other marketplaces, then you can access communities and individuals without access to traditional financial markets. And I think that's where the big power comes, where you can address communities that have a value set that is usually not according to the traditional financial markets. Where it's like, with the masses, you can have a big impact. We've seen that with the Reddit community and the GameStop share. So the opportunity here really is, it's a hybrid thing that lives in both the traditional financial market and can be living in decentralized finance, decentralized marketplaces. And I'm always saying, I'm a big fan of technology. I am very passionate about technology. I believe technology can have a big impact, but then we have to be aware that humans use the technology. So we have to say, okay, how do we use it? What are the interfaces? And when we look at tokens, then it's just a digital representation of something. And these rules have to be clarified first. But when we use this technology and when we ensure it's bankable, when this blockchain is compliant with the financial market rules, then it's a massive opportunity where you can create additional value to the product value, which is just one element of the full vertical. And I think that's where the opportunity is. I think my time is over.
Thank you, Tony. I have to say that's one of the best explanations I've had of blockchains and the technology, the pros, the cons, some of the complexities. And I've been looking at this for a very long time. So thank you very much for that. And I'm sure it was helpful for the audience. Now, we are going to go into our co-creation session. In this session, we're going to have Matthew with a whiteboard in the background, gathering information and collecting a lot of the things that we're saying during the co-creation workshop. Before we go into that, I'd really like to take a pulse on whether the audience think we can use tokenization as a way of, what did I say, as a way of getting capital down to projects. So if we could perhaps have the first poll come up, hopefully everybody signed up to Slido and they can take part. And then while we're waiting for the answers to come in, I would be really keen for the panel to just do a round robin on what we've heard so far this morning and let me know your high level thoughts. Adrian, if I could start with you, maybe.
Yeah, no, I mean, I think it's, you know, actually creating access for individuals and corporates to access is really important. You know, so it's ease of access to the market, its ability to transfer that asset as well, and it's a transparency of the value that's being created there as well. And whether that's for, you know, as Paul sort of alluded to at the start, whether it's an individual who wishes to contribute to rewilding and climate change and all the benefits that has, a corporate that wants to demonstrate that as well, you know, or whether it's an investor and perhaps you know, a particular asset class or an asset manager that also wants to complement their portfolio and do some offsetting there as well. You know, it allows that access. So you know, it's the right thing to do. The reason why we're here obviously is, well, how do we do it and how do we make it accessible and easy for all to trade, not just a specialist area.
Mm-hmm. Anna, could I go to you next?
Hi. So in terms of the tokenization, totally agree with the above points mentioned. I think that's one important point is to add here is interoperability, because a lot of it is a major challenge used to be and it still remains, not from the technology just perspective. I think this is something that we can see right now more in the advanced level where we see Ethereum networks where with the other protocols that are connecting those, but also from the taxonomy perspective. So I would say that interoperability is taxonomy. Of course, taxonomy is a key fundamental for scalability, which sits on the basis of their risk assessment. So I would say first pillar risk indicators, taxonomy of indicators, and this is what it is. What blockchain actually technology in conjunction with and the integrity enables taxonomy, and that all rounds into the interoperability, which makes ease to access the market and but most importantly to price the risks and to price the risk in the short term, in the midterm, and then the long term, and then that actually widens the types of investors and type of investors to invest into this type of new, not new, but what's like old new type of asset. That's my little add-on to this.
Thank you, Anna. Suzanne, your initial thoughts on the back of the two presentations we've just had.
Hi, let me unmute myself. You know, thanks very much. It's been really exciting to hear, and similar to you, Sadia, I think I'm finally getting a bit of better understand. Well, you know, I haven't really been a blockchain looking at it in detail, but it's been a really useful explanation. I think you know what excites me, what does excite me about making this happen, and what Paul was talking about is you know, the fact that you can have this hybrid model also that was touched on, you know, that it could be something that an individual can really have a direct feeling of a direct stake in something. And I think often I think in WWF we probably struggle with giving our supporters, the feeling they have, a really direct link to the field projects we invest in or work in, and I think this model would allow that to happen, whilst at the same time, hopefully, it can also be scaled and become attractive to institutional investors. So I find that, if we can crack that, I would find that super exciting. So I think that would be my comment for now. Thank you.
And I couldn't agree more with the idea that this type of technology starts leveling out the playing field and making it accessible to people who aren't just the governmental type investors or, really niche investors. It can get right open to the public, which would be amazing. Justin, can we hear your initial thoughts, please?
Hi, yes, I think this is definitely very interesting space, and I like technology stuff, and this is definitely quite exciting to see this coming through space. I think the whole thing is that the whole further down the value chain side of things, tracking is always quite challenging, and having this blockchain technology there helps to bring this to life. I think just thinking from on a public market side of things, the things that still concern is obviously liquidity is something that we obviously need to keep considering on, because forget about all this sustainability angle side of things. The key important thing is what's going to happen when it comes to our books if we're going to sell their position, and how volatile this is going to be, and all this needs to be considered. And I think the credibility, there's no doubt about the blockchain technology if it's implemented very well and robust. But if you think of it from a day-to-day management of a book standpoint, then this will be, the financial bit still needs to make sense.
Lovely, thank you. And yes, again, a brilliant point about the liquidity of the market and how we make sure it doesn't just work for one side of the equation. We've got two sides here. We've got a supply and demand, and we will definitely be digging into the pros, cons, and challenges for both those sides in a moment. Anna-Marie, would you like to share some thoughts?
Sure, thanks. So yeah, I guess there's a couple things that have come out that are really interesting here. Obviously, the market solution for bringing together, individuals and then trying to, in fact, scale this in a way that then creates investor demand. I think the point around secondary market trade and liquidity is a really interesting one. I guess from just a few thoughts from the legal perspective. I mean, I think using the blockchain is also helpful because the challenge you always have in the markets is transparency and accountability, and creating a market that is resistant to fraud, right? And a lot of the rules around why different people can invest in different things are actually not to stop regular investors or your mom and dads from investing in something. It's actually to protect them, because in the past there have been scams against people who weren't institutionals and who weren't doing this on a full-time basis as a professional job. And so it's a really interesting balance, right? Because as a regulator in all of these markets, you want to be able to have a product that people can invest in, but you also have an obligation to protect them from nefarious activity. And so I think the blockchain solution is an interesting one on that, in terms of how to aggregate up individual actions, and then also have on the other side the investor at an individual level be able to access that.
Brilliant. And another fantastic point. I'm just going to go to Julia and then to Dave. And we've got our votes in. Wow. Okay, so most people do think that this is going to be a way for us to rewild projects. I'm really pleased to see that, and we've still got some who are unsure or saying no. Is there anybody from the audience who's said yes, who would like to maybe share their thoughts in a little bit more detail? We got hands up.
Hi. This is Geneviève Lavelle. I have my hands up because I'm actually mirrored in the middle of this. I actually have a blockchain solution that I'm doing in agriculture. And what I think is necessary for this is that we not only involve, we do need to involve the banks, because there is going to be capital that is moving hand, and we're not going, this needs to be looked differently. It cannot be just a crypto aspect. So it is more a way of doing the assets. And the other thing is that is going to be necessary is to bring in the right underwriters, because these are going to be securities which have to be underwritten. The NFTs that are going on right now with some of the arts are fraud with issue because there's no legal tenant and there hasn't been clear trade barriers issues. So if I traded with somebody in Singapore, which law is actually going to take over? And in order for this to be a real investment vehicle, you will need to have liquidity. And it's going to have to be liquidity which is within the boundary. So because it is close to a stable coin, the OCC about 3 months ago said that banks could be part. So this is the Office of the Currency of the US, have said that bank can be nodes in networks which are either CBDC or sit stablecoin. So that means that you will then have the opportunity to actually have those funds in a way that it allows you to take cash or crypto, whichever is your preference. But until we get those pieces correctly and we have the lawyers also give their opinion, I think that it is very exciting. And I know of one project which is going on, which is digitizing elephants to create living assets. And this is something called Rebalance Earth. And it has at the helm Ralph Chiami, who is one of the IMF deputy directors. So anything can become an asset and can be digitized and then fractionalized. But we have to also make sure that we're using the right technology, and that we also are making sure that privacy is being taken into account, and transparency need not be complete. We just need to know that we can trust and go back if there is a problem. But I think we also need to look at a new term that I've borrowed from Dave Birch, which is translucency. So translucency means that we know all the information is there, but it is not open to all eyes. So this is fundamentally very exciting, and I see a lot of usage, but we also need to tread carefully, because we need to make sure that the company which is holding our tokens is going to be there if something happens. And that usually means regulation.
Of course. A very good point, well made. If we could maybe get the whiteboard put up so we can get into the co-development part of the workshop, that would be great. So fantastically, we've already started capturing some information. As you'll see on the whiteboard, we've got a matrix where we've got the supply side, which is coming from the rewilding projects, agriculture, forestry, etc. And we've got the demand side, which is the investors fundamentally. What we'd like to understand are what are the pros and cons of using tokenization, NFTs, and this approach to solve for the problem, for the problems that are similar to the ones that Paul very kindly outlined earlier. What are the pros? What are the cons? What are the open questions? And if I go over to the panel, who'd like to kick us off and get us started?
Well, I'll throw my voice in terms of what I think the open questions are, and I do agree with all the other comments that have been made thus far, particularly around, and this may seem strange coming from Microsoft, that I think the challenge is less about the technology and more about collecting the data. How do we actually capture the data that we need to make this kind of analysis? How do we verify that the data is indeed accurate? And then how do we analyze its implications, not just from a financial impact perspective, but also from a societal impact perspective? And so one of the things that I've noticed that's common to all of these ESG projects is that they seem to focus on one particular aspect, which is incredibly important. And the biosphere wildlife thing, I mean, I think the presentation I heard today was brilliant, but there's less focus on connecting the dots between them. And that's where the implications become particularly significant, especially from a societal impact perspective. For example, if we think about the cost and the consequences of the deterioration of our biosphere in, say, Western Europe, and we analyze the cost and implications of it in sub-Saharan Africa, I think we would see phenomenal differences between the two. So I think those are interesting aspects. And then how do you create the awareness within the financial services community and the willingness to invest and actually take a much more entrepreneurial perspective on the opportunity here, because it doesn't necessarily lend itself to traditional business case analysis and financial analysis. You have to take a very different and much broader, longer term view of what the returns are likely to be. So Corey, that's probably a lot to consume in one go. But put that under open questions.
What of those open questions, David, in your mind, which are the most sentient? Which are the most pressing ones that you think need solving most quickly, let's say?
Well, you can't do anything without data. Let's be clear.
Right.
So you've got to make sure you have all the data that you need, and you've got to be able to effectively connect the dots between them. What are the risk implications of this on other parts of the ESG framework? And then I think you can start to tokenize and represent it in some kind of way that becomes believable and useful for a financial services company. Because really what financial services companies want to invest in, and there's been a massive shift recently from investing in collateral, lending against collateral, to lending against data. And so it's less about the blockchain and more about the data that I think will drive the opportunity here.
Absolutely fantastic. Thank you. So we've got to posit that it's the data that is the massive underlying thing. Does anybody else agree or have a slightly different view? Paul, what about yourself?
Totally agree, and that's why that schematic, the data bit was in there to the forefront, and I just think the exciting. Well, in some ways, it's not only the data; it's the calculators. And it's the calculators and ontologies which go in it. It's the data. The data feeds are there to an extent. The grounded data is a problem, but so it's the data and how we translate that data through the calculators is absolutely key. But in some ways, for me, that's the bit which is maybe Daniel would agree that bit is solvable. It's there. It just needs putting together on this, and we're working with Matt at Everymetrics to think of ways to do that, and I'm sure other people are thinking along the same line of things. But I also think that I think what I was trying to stress, it's not just the data, it's the willingness of owners of land assets to participate as well.
Okay. Makes sense. Tony, I think I saw your hand pop up there.
Yes, I just want to add one more point. I think what really can accelerate the adoption of projects actually being happen on the ground is standards, and I think standards will open doors to everyone. We can disagree on this data or that data, but we should agree on standards, and that will be a massive accelerator for adoption in both in the cases as well as the technology. And I think there's projects on the way, that there's stuff happening. And then there's this approach where you say, okay, should we start with a Pareto efficient project where you have 80% of stuff correct, or should we wait until the good solution, the perfect solution avoids a good solution to have impact earlier, which we all know is important to start soon.
Perfect. Adrian, just before I come on to you, Tony, I'm going to ask you a clarification question. When you talk about standards, are you talking about the technical standards of, how you implement a blockchain and the rules around it, or are you talking about the project standards that say in order for something to be a token, it must reach a certain standard?
I'm talking, at least in my mind, I have three elements. It's the blockchain standards, their work that we're working on them. That's I think the easiest problem to solve. Then the data collection and the data processing standards. I don't know a lot about that. to be honest, and then the financial market standards. And I think there's also big movements happening there on a global scale when it comes to standardizing tools.
Mm-hmm. Thank you very much for that clarity, Adrian.
Yeah, I was just thinking there as well about a link across to sustainable finance and green bonds and social bonds, and there's certain criteria that the bonds are issued with under, and then there's a verification process and reporting process of progress there. So there is an element here as well that in order to have a token that has credibility, it has to be validated in some way about, well, you said it was going to generate X, Y, Z. How is it doing against, is X up at 110%, is Y down at 90%, and is Z at 50%, and what's being done about it, so that, the purchaser can see how it's trending over time and what action's being taken. So it has that credibility angle as well.
Lovely. And and that makes perfect sense about, a token has said it's going to do something over 10 years, 20 years, 30 years. How and obviously having the lease cover that length is obviously going to be important, but how do people feel about clawback mechanisms, and what happens if somebody hasn't done what they've suggested they will do? Paul, you've got your hand up. I'll start with you. You're on mute. The most commonly
I just want to do
phrased,
that. Sorry, I was just going to
phrase
respond to Adrian's comment about the need to baseline performance in it. And part of the idea of the lease model was that you could scale it quickly, and then you could have those comparativeness in it. And then I think this comes back to the question about data standards and data interoperability. Once you start building portfolios of these sites, you're getting data assets, which then become a valuable thing in their own right, both to performance rate, different types of tokens, and also both to increase the quality of the data and the verification processes with it. So sorry, Sadie, I was just responding back to that earlier point rather than the point you just made.
That's quite all right. Do you have any thoughts on clawback mechanisms and what happens if somebody doesn't reach a particular standard they've said?
I don't really. I think this is where my knowledge of these things is limited. I'm just sort of hoping other people might be able to sort of both raise those issues and solve them. Yeah.
I'll go over to Anna Marie, but with given your legal expertise, I would love to hear your thoughts on this.
Well, I guess drawing along the analogy from sustainable finance where it sits now, right? So you have kind of the older 2014 green bonds type principles, and then you have the more recent sustainability linked. And I think in terms of clawback and things so far, what the market has done is taken, I guess going to Tony's approach, it's taken kind of an 80% rather than a perfect approach. And so what the mechanism is at the moment in finance generally, if you draw the analogy to sustainability linked KPIs, is that if you don't reach your KPIs, it has an impact on your margin. So basically makes your borrowing more expensive or less expensive. And I think, the standard setting is a huge point to this and to assessing the impact. And I think that's, it seems like it wouldn't be really hard to do. And I think in general, it's easy to get sort of most of the way there, but you see what's happening with the EU taxonomy, and Singapore's putting in place this taxonomy. ASEAN is looking at a taxonomy. China has its own taxonomy. There are lots of terms that people use to talk about things, and that doesn't even get yet to impact. That's just really identification at the base level. So, I mean, when you're talking about trying to come up with valuing taking the data, but then translating the data into what is that in value terms, I think that there's work to be done there. And I think lots and lots of people are working on it. Impact reporting groups are working on that globally, trying to figure out, like, when we say something, what does that actually mean? And making that standard across what people are saying. Because right now those words are everywhere. Like, for example, there's no definition of net zero that people use universally, right? So people can mean up to 6 or 8 different things when they say net zero, right? So Just some not to be the lawyer complicating the solution, but just to highlight a few points.
No, but I think having that, people all say devil is in the detail, and that is so true, particularly I think with this type of approach. The detail is where we're going to either get a solution that works or a solution that falls down after a couple of years. I'm just going to nip over to the audience. Vola Parker, you have your hand up.
Oops. Oh, yes.
Hello.
Oh, hi. Oh, yes. Thank you. I'm really a participant here. So yesterday I did say that, I'm coming from the grassroots level, so ground up rather than top down, and I can see the use of the tool from top down, how it can still reach a ground, and basically so make it easy and accessible for all is where I can still kind of feel a little bit skeptical and worried as well in terms of, for example, investor protection, ID verification, all of those elements of who is it, and I'm really thinking of the landowner, where the biodiversity sits that we would want to protect initially. So really right from the bottom there, the likelihood of these people that they won't have any IDs. So that will be that is still a question. It's good to know that there's a thinking around how do we make it, but is it making it a bit more too complicated? I mean, why don't we start with just plain shares or equities? And we are talking about green bonds already, something that people already understand, rather than go down the almost synthetic route. And that's a bit of concern, because it goes down to, we could think of CDO's problem, for example, where repackaged things that's being repackaged and becoming like we don't know who the owners anymore. So I think that's where it's this question mark that's still kind of happening at the moment, in addition to the description of the data, which I totally agree that's still quite difficult. Having said that, even ISINs are different in the existing market, so it shouldn't really stop us from trying to get things going. But I'm for something that's transparent rather than translucent, I think, and more clear. But how, I still don't know.
Sadia, thank you. Sadia, I just wanted to say, it'd be a good time for another poll, if you wouldn't mind, while you, and then you can obviously respond if you have a response on that, but just push that forward. Thank you.
So absolutely right. Let's go into our next poll, if we could have it brought up. And this actually links very nicely to the points that have just been raised around, will tokenization of nature allow it to scale to institutional capital? Because of course, know your customer and the legal requirements are all really important to institutional capital. So would love to get everybody to vote on that. In the meantime, while we're waiting, did anybody have any thoughts on the knowing your customer and knowing who you're dealing with bit in blockchain? Because, Vola made a very good point around, how do you know who you're dealing with? Because it is all remote and, behind the scenes in some ways. That's one of the benefits of having a blockchain solution, but it's also a risk. David, I'll start with you.
Thank you. I think blockchain does provide a mechanism for doing that, but I would go slightly one stage further and use the technology in the context of digital identity. And I think that the more, that the digital world extends itself, the less certain we can be about who's actually the other end of the internet. And particularly in this new marketplace, we need to do everything we can to reduce risk, to make transactions bankable. And that reinforces the need to understand who the counterparty is at the end of the internet, but also digital identity, not just for people, but also for assets and entities. And actually, even you could consider them for animals as well, if you thought about wildlife in that context. So I would say digital identity is a critical part of any kind of solution in this space.
Lovely. Tony, your thoughts?
Just absolutely agree with that. Ideally, if it comes to humans, it would be self-sovereign identities that I, as a person, can decide what do I share and what I don't share. I want to add one thought to that is more people in the world have access to mobile phones than they have access to toilets. So I think this block in our hand, it's really something important, and adoption, if we think globally, has to go through this block in our hand and with everybody in this key interface, and then we of course have to think about the big five powerful organizations that have an impact on internet. But it is the mobile phone that will ultimately decide on adoption.
Lovely. Anna, I'll go to you, and then afterwards we'll get the results of the poll. So Anna.
I would add up to the digital identity also the digital certificates, because that what really enables this network of value network ecosystem, because as a next step it enables transferability of assets and exchange of assets. And I think what we're trying to achieve in different counterparties, buyers, sellers, or other third parties that are coming from each particular side, or if we're talking about the clearing aspect of within the asset transfer or anything that would have that certificates, be it digital rights, be it impact, be it financial aspect of the transaction.
Thank you very much, and I couldn't agree more. If we go straight to our results now, we've got a bit more of a distribution here. We've got a few more don't knows and knows. I'd be keen to understand, perhaps from somebody who's voted no, why they don't think it will allow access to institutional capital. Anybody willing to share their thoughts on why it might not work? Susan Davies.
Hi, I guess I'm not against the concept. I see it as a sort of enabling technology in the same way that the carbon markets sort of enable that sort of process, but ultimately they depend on supply and demand. So I guess the reason I put no there was only more, not that I'm against the tokenization concept, but that ultimately you still need value coming in to create the value of these tokens. And what you're talking about is either sort of philanthropic style donations where somebody wants to invest in that, because they want to have an outcome for nature, and they will want to see, and I can sort of understand there's a link on the blockchain, but I think it's quite a complex technology for a lot of donors. And maybe I'm thinking of my mother and the wider world of people who maybe want to make a donation to a project, but it's quite a complex way to do it. But maybe that's just an age thing and it'll, get better. But when it comes to the payment for ecosystem services, a lot of those services are not necessarily, it's very easy to say, okay, for something like peatland that maybe causes peat to go into the water supply, and a downstream water supplier wants to pay for that service because remove the, if you restore the peatland, you stop getting, the water, you don't have to pay to remove the peat from the water. So if you can identify those ecosystem services, that creates value, but you still have to be able to do that. And I'm not clear 100% that unless you solve that problem, this is an enabling technology. So I guess it's kind of a half no. It's like, I see this as a, you still have to solve that solution of where the value comes from to create a market that institutional investors will invest in, if that makes sense. Yeah.
Yeah. I mean, I've got thoughts on that, but I'd like to open it up to the panel on what they think around this. David, you're first off the blocks. Let's go to you.
I just want to reinforce the importance of that. And I think the way to think about it, traditionally, the way we think about financial opportunities, to think about the ROI from a financial perspective. But I think the goalposts are shifting, and this goes back to my point about societal impact. I think we need to focus on what is the impact that this is having, how can we measure that, and then subsequently look at the return. And when we think about our Climate Innovation Fund at Microsoft, that's how we evaluate future projects. We look at them on the basis of their impact first, and then what is the ROI, the financial ROI that flows through that follows. So completely agree with the value point.
I think,
but impact first.
I think for me, there's also an element of a changing landscape in the corporate world, with more corporations caring about their ESG impact, and perhaps it's something that we will continue to see with institutional investors trying to invest in those types of companies. Julia, I'll head over to you next.
Thank you. Yeah, I just wanted to emphasize the point. I love where this is going and what we're talking about. And when we think about what the UN is talking about as us being in this ecological emergency and climate emergency, and that unless we can really reverse the land degradation that's gone on, we won't meet the UN SDG standards. Mm-hmm. And so, trees being what they call, right, the oldest and most powerful clean technology that there is, restoring the natural landscapes, definitely are the most effective and cheapest defense that we have. Mm-hmm. So I think part of what we're needing is to continue to use tokens and other ways to communicate the financial value of restoring the landscape and reversing the ecological damage. Mm-hmm. So I think there's a very clear story. It's just being able to do that in a way that then those that really care most about where financial risk is and where financial benefits are can have more of a clear understanding that investing in this and investing potentially in tokens to help reverse ecological damage is profitable. And there's many different ways to demonstrate that.
And Julia, if you don't mind, would you mind elaborating on that just a little bit more about how the ecological damage links to the companies and getting towards the SDG targets? And perhaps for those who aren't aware, maybe just talk a little bit about what the SDG targets are and the realm that they cover.
Well, I think at a high level, I'm just trying to think how to summarize because there's a lot there.
Sorry, putting you on the spot.
No problem. No, at a high level, there's goals that we need to really make for sustainable development in our world. And that has impact economically as well as socially and environmentally. And there is clear lineage. There's a clear linkage that the more we can restore our natural landscapes, then the more that's going to help us related to climate risk and all kinds of health risks and, environmental risks and all kinds of different ways, and corporations risk, business risk, investment risk. This is one of the reasons that ESG companies now care so much more about how they're perceived, because the ESG ratings are getting more and more important. Mm-hmm. So I think it's just a matter of more work to align that as we invest in nature and invest in reversing nature, mapping out ways, and this is part of what we do with Earth Knowledge Indicators, but mapping out ways that can demonstrate the impact and then demonstrate the financial benefit, which will help others align with those benefits, I think, much more substantially. Mm-hmm. There's a lot to think through about it.
Absolutely. Justin, let's hear some of your thoughts as well.
Hi, yes, right. I'm going to put my hands down so it doesn't.
You're coming through a little bit quietly. If you could move
right
your mic.
That was excellent. So I'm just going to share some views on the sort of public market side of things, because again, I think there's lots of talks here that is all good. Obviously, just trying to think of ahead of if I were to buy a share today from the market or buy any bonds today, what does this actually mean in terms of access to capital on that front? Because mind you, the institutional investors, they invest in really small cap or private side is actually not a lot if you look at the amount of asset owners out there. And so just thinking from that perspective, right? I think yes, it does help to actually help us map things out. It does help to actually give some transparency and put some dollar value behind it. But to just buy token just for token's sake is quite challenging from that standpoint, because even today, even in UCITS fund, we're not even allowed to buy any sort of cryptocurrencies or whatsoever in that sort of sense. Even buying companies that invest in those, I mean, Coinbase was like to skyrocket, even though that does create some issue, right? So it's about how do you even get regulators to be allowing us to first invest in this. That's the very first hurdle you need to get through. I mean, this is definitely a very good idea, but getting regulators to understand this conceptually is the very first thing. Now, the second thing is, then you get the retail side, the market side, to understand that we are not actually taking the money on the punt, because that's how it's actually been seen by some people, right? Yeah. And then the third thing is, how do you tie this into so-called, everybody, I keep hearing people talk about risk management when it comes to natural capital, climate, all those sort of things. Well, this is the reason why we need to invest in marketplace. They are liquid, because most of these risks are quite long dated, and investors out there don't hold. I mean, if there's something they don't smell right, they run for the hills before it even happened. So unless you're the sleepy investors lock yourself in a basement, then you probably hold something for 10 years, 20 years, and then realize you're screwed. But most investors will be able to come out. So it's a matter of having some form of tokenization is able to put that into context in terms of value. So once you have a value, people can value it, you can tie it to NPV, and then you can work it out. But if your investment horizon is 3 years or 5 years, then probably the climate change impact is not really going to hit the company unless regulatory comes in place. Right. So I think it's all good concept, but we just need to get a bit more realistic on the ground in terms of, I can sell my positions away tomorrow if I don't see the companies doing the right thing, right? So how is climate change risk going to impact it? Probably not that much. How is deforestation going to impact buying into Nestle today? Probably not that much, because you can sell the position next month.
Okay, that's a really good point. Could we move off the answer view and perhaps go back to the panel view? Slightly more interesting, and then we can actually see people when they're talking. While we're sorry, it was just we had that blue screen. I wanted to move off it. Justin, you've raised a really good point, and we've discussed a lot now about the demand side, what the corporate investors want, and how what can we do to allay their fears and try to get them investing in this. But what about the supply side? The people who are the landowners, how do we convince them that this is a good thing? And that actually, because you're 100% right, that somebody could say, actually, I don't want these tokens anymore. You can sell them, and you've got people who've just invested a lot of money on a 30-year project to rewild. How do people think that plays out on the supply side? Who would like to start? Or if anybody has any other places other points they'd like to discuss?
Interesting to look at the whiteboard as well, Sadia, just while people are collecting their thoughts on that question, just
absolutely.
Yeah, I can quickly dig that out. Yeah, here we go.
Thank you, Matthew.
It's also interesting, we have quite understandably discussed and identified a lot of items on the cons side, both from a supply and demand in terms of the challenges. And it'd be interesting to know really what this is unblocking, more of what this is unblocking in terms of supply and demand on the pros side, in terms of the opportunities this presents, just in terms of the picture that's coming up from the whiteboard.
Yeah. Be really key. Can we actually have a zoom in on the pros, actually? Because I think it's very easy in these types of discussions to get wrapped up in, this is a problem with it, this is a problem with it, this is a problem with it, but where are the opportunities, let's say? And while people are having a look at that, David.
I was just going to sort of comment on one of the challenges with the supply side is, what else would you do? What are the competing demands on land, for example? And one of them is food production. And so, if we're looking at the explosion in the population, the demands on land for the production of food are overwhelming. And so that's one of the issues that we need to think about this strategically. We need to look at this holistically as an issue. It's not just about the wildlife. It's what are we going to do with land generally? And ultimately, I think it becomes an economic issue. And where is the value, to an earlier point, to the supplier of land? Will they make more money by handing their land over to, say, reforestation than they will to the fertilization or production of crops? And how are those crops to be produced anyway? So I think those are kind of some of the issues we might want to consider when we think about the supply side, just to start the discussion off.
Would anybody like to come in?
Can I come in? I think that one of the things, this is Geneviève, I'd like to come in with one thing, that we're also making some assumptions here in terms of where we actually see this taking place. So if we look at a place like Africa, only 10% of arable land is actually being used for agriculture. So these are a lot of the ESG programs which are trying to be brought up. But we also need to look at the land registry, because once we create for that farmer something which is giving him a fair income, how is he protected by the laws for somebody coming in saying, this is my land? So what we actually need to look at is proper land registry in many of those places is not where it needs to be. But then I'd like to take it also even to the Western, or what we would call developed economies. There is a fundamental problem that farmers are not being not getting access to working capital in the way they need to if they're small holders. When we look at the US, about 80% of farmers are on less than 3 acres, which are in the US defined as small holding. And however, they have difficulty also in getting working capital because we do not have the way to actually track what they're doing. So when we look at blockchain technology, we need to look at it 2 different aspects. One, which is just traceability, and the second one, which is how do we create liquidity by tokenizing what are really a digital twinning, and a digital twinning where the person buying the token does not get rights to actually the items, but actually gets to invest in that and know that his investment is underwritten in some way. So I have been living this for the last 5 years, and I love this discussion. And the NFT has actually unlocked in ways and made a sexy word out of digital twinning that all geeks like me have been saying instead. But we also need to look at where are we planning on putting this, and what are the infrastructure challenges that we need to first address. And those infrastructure challenges can be just as little as land registry.
Perfect, thank you. Paul and Anna Marie, actually, it looked like you had a comment, so I'd like to go to you first and then over to Paul.
Yeah, land is one of the most, as you can imagine, one of the most complicated parts of law. Not you know, certain countries have registers that go back hundreds of years and are accurate. Some you know, in the U.S. it's state by state, and each state has different laws. You know, across the rest of the world, who knows? And then you've got native title, and you've got all sorts of things in all sorts of countries. So when you talk land, you're really talking near and dear to everyone's heart there. But I think the point that I thought was, I know everybody's con side, and you asked for something on the pro side. I think a pro is that this conversation is a way to give value to an externality that we had not valued, right? And if there's no value in it, business world will not respond to it. And people won't respond to it. I mean, you can't, unless you have some kind of, you know, way to say this is worth this, then a farmer can't say, well, I'd rather do X, Y, or Z. And I think the other thing that is rife through the agricultural world is that it is not a pure economic system. It is rife with subsidies and support structures that actually distort the value of doing various things. And so I think that's a big point in here of how you value this versus how you get rid of artificial valuations that are driving the wrong economic behavior.
Absolutely, that's a fantastic point. Paul, I'll head over to you, and then Adrian, and then we'll go into our third poll, and then I'll come back to you, Tony.
Yeah, it was just a response on David's comments about the food production issue, and of course, you know, we have a big population which needs feeding. But I think that we increasingly realise that the intensive agricultural model is unsustainable in the long run. Further, that it has sort of moved into more marginal lands where a lot of the damage, a lot of the costs of that really become apparent. You know, in terms of watershed issues or the loss of traditional community cohesion and what have you. And I think the idea of rewilding, and it could be regenerative agriculture as well, they're sort of just different scales on what we're doing, that this sort of token, if we start giving new forms of value to forms of land use on less marginal agricultural land, and sort of just resetting the balance a little bit. So we might be maxing out food production on the really top agricultural land, and then getting a whole range of different benefits from the less productive agricultural land. So I think that's partly how this is conceptualized. It's not an either-or thing.
No, and I think I agree with that completely, that it's not an either-or, and it's about managing at a different scale. Adrian, and then we'll go into our third poll.
Yeah, no, I think that's, I mean, they're all really valid points, and it is, you know, what's really striking from the conversation here is it's a balancing act, isn't it? Very much so, you know, and it's about that balance of competing requirements for land, because we only have so much land. I know that certain countries have reclaimed land from the sea, but, you know, also we're facing a prospect that more land will be consumed by the sea over the coming decades as well. So there's a conflict there that actually the amount of land that's available for agriculture or rewilding is going to decrease because of climate change, because there'll be more arid deserts created as well. So, you know, there is that the value of a token here can only increase as the scarcity of the assets decrease. But how do you get the balance about what you do with that particular land? You know, so it's a really interesting dilemma there, and that just adds another whole layer of complexity into. If you think about trading this, it's in a complexity of the pricing. You know, so how on earth do you price something that you know is going to change in the future, but you're going to have all these competing factors for? So it's really interesting.
Lovely, thank you. So our third poll is about, would, you know, we spoke about rewilding, and there's this idea that, well, actually carbon's an easier option, but would tokenization offer a good solution for carbon credits? And I have to confess, this is one that's very close to my day-to-day life, because it's what BX is primarily focused on. How do we tokenize carbon and then look at other ecosystem services? While people are voting on that, Tony, what are your thoughts on the discussion so far and how technology plays a role in all of this?
I was very influenced by Justin's point and you know the difference of the timescales. Just on an ethical level, I studied climate and environmental physics and was responsible in Switzerland for some stuff. And then one day the director told me, you know, you can go home, let's take a day off. And I asked why, and he says, you know, the decision makers said they understand the problem, they see the impact, but it's not on their time scale. So I think that's something that we observe. And my thoughts were, you know, one interpretation can be, you know, the problems that we have were created, so the externalization of costs were created by the system that we have with institutional and banking, and that you can actually store value with institutions. That's one thought. And we have the tragedy of the common that is happening. And now we have a new technology, digitalization, and we have two ways to handle digitalization. And one way is to give it away because of it's easy to use to big organizations, or we take responsibility and we say, actually, we use this technology that allows control over data, which means I have responsibility over data. And to oversimplify this again, you can say there is no Bitcoin hotline. You can't call someone and say, where is my Bitcoin? So I think it's a massive opportunity, this new technology, but it also means responsibility for the user. And I wonder, how can we motivate the next generation to A, see this, and B, take on the responsibility. I don't have the solution, but I see it's an opportunity, and I tried it with my own kid. I failed when he was young. He says, I want to be rich, and then I said, well, you are rich on a global context, and then I explained to him how rich we are in Switzerland, and then he said, okay, so we're like kings of the world. And I said, yes. And they said, okay, what do you do with this knowledge now? And he said, well, I make sure it stays that way. So I mean, he was 5 or 6 years old, but nevertheless, I mean, how can you communicate it, and how can you make it actionable?
Absolutely. We are coming up to the top of the hour. David, I'll come to you next after we've had a look at the results that have just come in. Interestingly, we seem to have more, based on our first poll, we seem to have more support for tokenization being a good solution for rewilding than we do for carbon credits. Now, that is very interesting. Oh, things are moving. while things are settling out. David, what was the point you wanted to make?
I just wanted to respond to Tony's comment about timescale. I don't know whether everyone noticed the recent change by the German Constitutional Court that recognized that the German legislation that followed from the Paris Agreement was effectively unconstitutional because it didn't recognize the rights of future generations, because in reality they felt that the actual adjustment that needs to be made and the cost of that adjustment becomes almost exponential after 2030, whereas the Paris Agreement really looks at from now until 2030. So in other words, the current generation, effectively, the decision is saying that the current generation is in fact deferring the cost of adjusting to change to future generations, and that's unacceptable. So I thought that was a very, very interesting point, particularly as in the US we're struggling to define what the electorate means in terms of today. But the recognition of future generations and the rights of future generations is absolutely fundamental in terms of any discussion around any of these topics.
Absolutely, and I wonder how that plays out the other way around, not just with deferring the cost of making these changes and becoming more environmentally sound, but the other side of it, which is, well, if we don't do something, those future generations will not have the ecosystem services, and what is the duty of care of today's generation in that regard?
Can I just jump in there?
Of course.
Just because there are more cases. So there is the German one, which is fascinating. There's also, there was an earlier one against the Dutch government, which again, the people won against the Dutch government, saying that Dutch government was not doing enough. And there's a case going on at the moment in Australia being brought, which is a really interesting one, being brought under a duty of care argument that the government owes a duty of care to the youth to do things now and fix things while they're fixable, as opposed to deferring costs or thinking that there's going to be some miraculous technological miracle that happens at 2032 and solves the whole world issue. So those are live, active conversations going on and being enforced in the courts.
And I think that, it's actually a really great point to end on, that everything that we're doing here is about the future. It's not about what's happening right now. It's about the future and how do we secure that for future generations and for the future of this planet. So thank you, everybody, for your input. I'm going to hand back over to Richard for a wrap up so that we stay on time. Richard, over to you. You're on mute.
It's been fantastic to listen into the discussion and debate and the active input from the audience, which is exactly what we were hoping for. I think with all of these things, really the proof of the pudding is in action, not inaction, but in action. And what I really hope we can do from this is to go forward and put some of these ideas into a proof of concept, put them through an accelerator, and we actually can see what's going on, because we can sort of get locked in a paralysis of analysis otherwise. And I do think we need to have some new creative ways that people can invest. Farmers can perhaps see money coming in, so their business case improves to do rewilding. The evidence of what works and doesn't work will actually iterate forward, and we'll learn from that, and we'll actually see whether it becomes institutional, because the institutional money will tend to follow what the demand in the market is. So stay with us. Hopefully we can carry on and take this forward. Next step on our journey is that we've got our final workshop of this series, which is coming up this afternoon at 2 o'clock. So we have our, as it says there, our next series is in December, but our actual next workshop is at 2 o'clock. And there we switch gears. We switch gears to how, if we've got these new targets that we heard about yesterday that are coming our way on biodiversity and natural capital, can we anticipate those? What can we do to inform boards that these targets are coming, that the climate muscle that they've started to exercise in terms of scenario planning, stress testing, using scientific-based data to see the exposure and risk that they have within their organizations or their portfolios. So we're going to run through a sort of synthetic experiment of pretending you're a board, and we're going to present you with a use case. We're going to ask you to vote on a few scenarios, and then we'll debate whether the data would be able to help you make a decision and what the outcome of that decision would be. So we'll switch gears away from brainstorming and into more of the use of data to educate and train boards. So for now, I would just like to say two things. One, the whiteboard that Matt has been working on will work on that and try and make that available to you, so you've got a record of this. But most of all, I'd like to thank Matt, Sadia, and everybody else on the panel and the audience for a really fascinating discussion, and it's a discussion I'd love to see us take into practice. Thanks very much indeed for your time, and see you later.